All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Thursday, everybody. Is today Thursday? Yeah, today's Thursday, May 29th, 2025. And the top story this morning is tariffs headed to the Supreme Court. At least that's according to the U.S. Court of International Trade, which struck down President Trump's Liberation Day tariffs yesterday in a, I guess, not too surprising ruling. We kind of knew this was bound for the Supreme Court ultimately. Does the president have the authority to unilaterally impose 145% tariffs on everything coming in from China? I'm no legal scholar. I am not going to weigh in on that one. Let's let all the armchair lawyers argue that one out on Twitter, and then none of that will matter. We'll see what the judges ultimately say at the Supreme Court. But for the time being, there's more uncertainty. That means any negotiations, any trade deals that were in progress, they're off the table right now, right? Why are you going to negotiate a deal? If you're the European Union, if you're India, if you're Saudi Arabia, why are you going to negotiate a trade deal right now when the reason you're negotiating, a court might hand you everything you want anyway? So this is going to throw a monkey wrench into any possible negotiations. More uncertainty, which markets typically don't like uncertainty. So you would think, yeah, okay, maybe the markets like the news because tariffs bad for corporate profits. But at the same time, the addition of new uncertainty, investors don't like uncertainty. But if you notice, the market's not really reacting either way. Why? Because the markets have kind of already priced in an absolute abandonment of tariffs already, right? The S&P 500 is significantly higher than it was on April 2nd on Liberation Day. Almost as high as it was in the lead up, or almost pretty much back to an all-time high, right? We're a little bit shy of that February level, but heading higher still. And look, the market has this overall positivity priced in. Maybe that's a little bit excessive, maybe not. We hear a lot about the taco trade yesterday. Trump always chickens out. That's, oh, okay, CNN just loves to talk about that. That's their new talking point after years of pretending Biden was not a vegetable. Okay, if that's your thing now, good luck with that. But the point is, guys, the Supreme Court's going to weigh in on that. How long is it going to take? I don't know. Supposedly the ruling gives the Trump administration 10 days to stop collecting the tariffs. He's going to get an injunction. They're going to halt that ruling while they argue it out in court. And then we're probably not going to hear about this for a few months, one way or another. Now, in the meantime, the 90-day deadline comes and goes. What happens to that deadline now that the court has issued this ruling and all the negotiations are on hold? Kind of throws a monkey wrench into everything. We'll see where we go from there. The other big story going on this morning is Nvidia's earnings, and in my opinion, what was an absolute clown show, sideshow, freak show, whatever you want to say, on their earnings call yesterday. First things first, earnings and revenue beat if you ignore the H20 story. When the initial report came out of Nvidia's earnings yesterday, there was like 8 different versions of the earnings number. There was net income was reported, then adjusted earnings, and then earnings without the H20, earnings with the H20. If you go look in the press, there was like 15 different numbers were initially reported. Nobody knew what the hell was going on. Ultimately, it comes down to spending increased on data centers, all right? Factor in the H20, don't factor in the H20, whatever you want to do, whatever number you want to report. Data center construction is still expanding. So what happened in the quarter? Why is that? Very simple. Microsoft has scaled back their data center plans. They're cutting their expansions. But OpenAI and CoreWeave stepped in to fill that role, and they did it with more money from SoftBank and Magnetar Capital. And that was enough to keep the spending on these chips going. That is ultimately what drove the big domestic increase in spending. Now, there was this entire sideshow distraction going on with China. CEO Jensen Huang, CFO Colette Kress, they were talking all this time during the earnings call about the H20, about the export controls, and how the China market is totally cut off to us now, and the policy is so terrible. That is all BS. Yes, Nvidia took a hit from the H20. The H20 does not matter. The H20 wasn't even their best-selling chip in China. We all know what their best-selling chip in China was, all right? Even the people who are denying this happened know. We know, they know that we know, everybody knows that Nvidia is selling their chips illegally to China. all right? You have to be deaf, dumb, blind, and missing a chromosome or having extra chromosomes in order to believe Nvidia chips are not being sold wholesale into China at this point, all right? Most people are content to ignore that story because they're making money off of it, because their stock is going up, which, by the way, makes you a pretty terrible person when you factor in that we know the Chinese are using these chips for military purposes, and therefore American and Taiwanese lives are on the line because of this. And if you're like, well, I don't care because I'm making money, well, what does that say about you? Nothing good. But that being said, they're making all this hoopla about the H20. The H20 doesn't matter. Nvidia told us how they're making so much money in China. $24 billion in revenue from Singapore in fiscal year 2025. $24 billion. One city country is not buying all that stuff. We all know what that is. Nvidia told us what it is. They even put language in the earnings call. My friend Dario picked this one up on Twitter. They put the specific language in their earnings report to explain just how they're doing it. Customers A and B, Dell and Supermicro, they are U.S.-based customers, all right? Their headquarters is in the U.S. They're buying the chips. They're being billed to Singapore. They're being shipped to Malaysia, and from there, they're going to China. And so Nvidia says, oh, most of our revenue is to U.S.-based customers. Yes, that is true. They are U.S.-based. That doesn't mean they're selling it to the United States. We all know they're selling it to China. Nvidia themselves have all but confirmed that. And look, the world is just content to pretend this isn't happening for now. I don't know what they're waiting for. There will come a day when this matters. The DOJ is probing Dell and Supermicro for their illegal trades in China. They're investigating Nvidia as well. One day, somebody is going to say, yo, you guys are breaking the law and you're not allowed to do that. But it is not this day. And so in the meantime, number go up. No big surprise there. But we're going to look at the language in their earnings report that describes exactly that scenario. We got earnings results from Kohl's this morning also. That was a beat, although the numbers were pretty terrible. It's just the market was expecting more terribler. And so because Kohl's was just awful instead of totally dreadful, that stock is up this morning. Everybody's celebrating Salesforce, a big revenue beat. Oh, all my investments in AI are finally making money, even though profits are flat year over year, which means AI isn't actually making them money. It's just jimmying their revenue higher. But I digress. You got some crazy stories out of the UK this morning. Power prices have gone negative again as renewable energy continues to wreak havoc on the power grid. And there's a story about UK pension plans being forced to buy private equity investments. Forced. That's the big thing there. Not just, oh, we're going to open up these investments, make them available to pensions, make them available to retirees. No, the UK government is forcing people to put their retirement into private equity investments. What the hell is going on in the UK these days? That Labour government is out of their freaking minds with this stuff. A mandatory bailout using your retirement dollars. We all knew this was coming. I'm just amazed they're doing it out in the open. We've also got another big U.S. firm, Collar Capital, is issuing what's called a collateralized fund obligation, which is basically securitized private equity investments and private credit debt, all put into the same bag of steaming dog poop, flaming dog poop, if you want to look at it that way. Collateralized fund obligation. Collateralized excrement is what that is. That one's going on this morning. We've got initial jobless claims were a little higher this morning. No big surprise there. Continuing jobless claims making another new high. That's starting to get concerning. People losing their jobs at about the same rate, still having trouble finding a new job. The unemployment numbers are starting to pile up here. And we got a curious big miss on corporate profits as part of our GDP data this morning. And I'm not talking about like a little bit of a miss, a huge miss, deeply negative when the market was expecting a positive number. I don't know what's going on there. I mean, I'm not surprised to see corporate profits are down given everything that's going on in the economy. I just have no idea why it's suddenly showing up in the data. And I don't think anybody really has any idea why. Everyone's trying to like explain and scratch their heads over this on Twitter this morning. Nobody really knows, but we're going to look at that data point, see if we can't figure out or maybe guess what is going on. But for now, we got to shrink my big melon of a head and let's see what's happening in the markets this morning. Hey, don't forget that like button and that subscribe button for the YouTube algorithm. And if you're new here, Stick around. Come on back tomorrow because we do this every morning. So come have your coffee with the Melonheads as we go through markets. Right now, the S&P 500 is higher by 47 points or 0.81% higher. We were a lot higher. There was a lot of enthusiasm in the futures market last night on that tariff ruling, as well as the Nvidia earnings. We're kind of grinding lower here this morning. So we'll see if that holds throughout the day. The Dow, meanwhile, is higher by 98 points or about 0.25%. And the NASDAQ is leading the way higher, 1.4% higher, 295 points to the upside. Meanwhile, the U.S. dollar is a little bit weaker this morning, 44 basis points in the red at 99.47. And looking over at the bond market, we have got lower yields here. The 30-year Treasury, 4.964. That's lower by a point and change. The 10 years at 4.457. That's 2 points and change lower. The 2 years at 3.967, lower by 2.5 points. And the 1 month is at 4.286. That's actually higher by a fraction of a point. Not a lot of movement in the bond market this morning. Looking over at commodities, we've got gold having a good morning here. It's higher by $22, about 0.2% higher, back above $3,300 at $3,311 an ounce for spot gold. Spot silver also having a good morning, up 28 cents or 0.87% higher, $33.25 for spot silver. I like the shiny. Copper is higher by about 1%. Platinum is higher by 1.5%. Palladium is higher by 1.2%. And crude oil is lower by about 0.6% here, $61.47 for July WTI crude futures. And speaking of WTI crude, I have an interesting thing going on in Bloomberg this morning. Kazakhstan says it can't cut oil output despite the OPEC Plus deal. This is pretty interesting here. Kind of makes me wonder, why is Kazakhstan even in OPEC at all? Let's just read on a little bit here. Kazakhstan said it can't cut oil production right now and even hopes to increase output beyond planned levels later this year, deepening a standoff with its OPEC Plus counterparts. Output is more than 70% controlled by three large international consortiums, and the Republic has no right to enforce production cuts on their fields, Energy Minister Yerlan Akhanzanov told reporters in Astana on Thursday, nor can it practically cut output at other old fields operated by state-run Kazmunneh Gas National, he said. The comments made just 2 days before the OPEC Plus alliance meets to discuss production levels for July threatens to inflame tensions with the group's leadership. So Kazakhstan's sitting here all of a sudden like they've adopted free market capitalism, and they're like, no, the market wants the oil. We're pumping the oil, even though we're members of this cartel that rigs prices. And keep in mind, the reason why OPEC has been increasing production here, besides efforts to placate President Trump from the Saudis, punishing Kazakhstan has been a big part of this narrative because the Kazakhs have been dramatically exceeding their quota assigned to them by OPEC Plus. This is not going to help things here. So I think this probably putting a little bit of downward pressure on oil prices this morning. Meanwhile, we have got Bitcoin. Let's set this to daily candles here. Bitcoin is a little bit higher this morning, $108,480 as priced on Coinbase. We're a little bit higher than we were this time yesterday morning, but kind of still in that range, bouncing out around $110,000 an ounce. No big news for the moment in the Bitcoin markets today. All right, let's talk about Nvidia earnings here. Nvidia CEO Jensen Huang hammers chip controls that effectively closed the China market. And let me just say, this whole effectively closed the China market thing, that means legally effectively closed the China market. Nvidia doesn't care about the law, though, because Nvidia has been illegally selling H100s to China for years. We all know it's been happening. We just pretend otherwise because we want our stock to go up. As pleased as Wall Street was with Nvidia's quarterly results on Wednesday, CEO Jensen Huang said the company is leaving billions of dollars in revenue on the table because it can no longer sell to China. The $50 billion China market is effectively closed to U.S. industry, Huang told analysts at the beginning of his prepared remarks on the earnings call. As a result, we are taking a multi-billion-dollar write-off on inventory that cannot be sold or repurposed. They're referring to the H20 GPU, which was their down-powered, specific for the China market GPU. Again, that's a sideshow because they're already selling H100s, which have been illegal for years. Even without access to the world's second biggest economy, Nvidia reported 69% year-over-year revenue growth to $44 billion in the first quarter, topping analyst estimates. That's not surprised. That money's coming from Magnetar and SoftBank via CoreWeave and OpenAI. Still, Huang is making his displeasure with the China situation quite clear. In April, the Trump administration told Nvidia that its previously approved H20 processor for China would require an export license, which effectively cut off sales with no grace period. The company said on Wednesday, the U.S. government has highlighted the national security concerns of having Nvidia's sophisticated AI chips sold to a chief adversary. The H20 was introduced in Nvidia after the Biden administration restricted AI chip exports in 2020. It's a slowed down version intended to comply with U.S. export controls. And guys, the H20 does not matter. All right. Yeah, everybody's like, oh, they left $2 billion in revenue on the table because of the H20. Well, look at this. All right. While they're sitting there hyperventilating over $2.5 billion worth of H20 revenue, look at Nvidia's Singapore revenues. Shout out to the transcript who posted this one on Twitter last night. $23.7 billion in revenue to Singapore. All right. Now, Nvidia maintains to this day that, oh, don't worry, it's not definitely not going to China. That's just the build to location. All right. Nvidia uses the phrase revenue by geographic location or by customer billing location. That is a phrase that does not exist anywhere in the world of accounting outside of an Nvidia earnings report. And it's just the way that they maintain their silly, plausible deniability so they hopefully don't end up in handcuffs someday. And all this hoopla about the H20 was really just Jensen Huang and Colette Kress hoping they don't end up in freaking prison over their export control violations, which could absolutely freaking happen. But look at what's happened over the last 3 years. All of a sudden, almost $24 billion worth of revenue is going to Singapore. We know those chips aren't going to Singapore. They're being built to Singapore. They're being shipped to Malaysia. And from there, they're going on to China. Now, Nvidia is telling us exactly how they're doing this. Shout out to my buddy Just Dario on Twitter, who posted this screenshot and highlighted this yesterday. By the way, Just Dario did an excellent write-up on his blog. I highly recommend you guys check that one out. It's on his Twitter feed, @DarioCPX on X. Now, they're talking about indirect customers. This is taken directly from NVIDIA's earnings report. Indirect customer revenue is an estimation based upon multiple factors, including customer purchase order information, product specifications, internal sales data, and other sources. Actual indirect customer revenue may differ from our estimates. For the first quarter of fiscal year 2026, two indirect customers, which primarily purchase our products through system integrators and distributors, including through direct customers A and B, are estimated to represent 10% or more of total revenue attributable to the compute and networking segment. So we're talking about two direct customers, A and B, who are selling to indirect customers. Direct customers, A and B, are Dell and Supermicro. All right, that's who that is. That's their server makers. All right, and by the way, they're estimated to represent 10% or more of total revenue. Put those two together, that's 20% or more. Wow, that almost exactly matches those Singapore revenue numbers, doesn't it? And what they're saying here is this is Dell and Supermicro. They're US-based companies. They're buying our GPUs and they're selling them to somebody else. And well, they bill in Singapore, so we don't care. We estimate they're going on here. We estimate that in the first quarter of fiscal year 2026, an AI research and deployment company contributed a meaningful amount of our revenue through one of the above indirect customers and through our other indirect customer that provide cloud services. Now, that other indirect customer who provides cloud services, that is CoreWeave, who NVIDIA, by the way, just invested $250 million in. And that AI research and deployment company they're mentioning, that's OpenAI, who NVIDIA just invested in. So what NVIDIA is mentioning here, and this is new, this was not in their previous report, NVIDIA gave a bunch of money to CoreWeave, NVIDIA gave a bunch of money to OpenAI, SoftBank and Magnetar Capital did the same thing, gave money to both companies. Now they're buying the chips. That's making up for the decline in Microsoft. And so it's no surprise. I mean, they're basically spelling out the round tripping and the export control violations right here for us in plain text. Everybody just pretends it's not happening because they want their stock to go up. They go on to say revenue by geographic region is designated based on the billing location, even if that revenue may be attributable to indirect customers in a different location. Revenue from sales to customers outside the U.S. accounted for 53% and 48% of total revenue in 2026 and 2025, respectively. So look, guys, they're telling us what they're doing here. That's what it is. The government is either going to police these export controls to China or they're not. If they're going to continue to allow Nvidia to break the law without any consequence, then Nvidia is going to keep beating earnings, and then missiles trained on this stuff are going to be targeting our carriers in a few years. That's what it comes down to it. And if you're okay making money off of that, well, good for you. Apparently your kid doesn't serve in the Navy. All right, let's shift gears a little bit here. U.S. tightens China chip curbs by targeting design software. All right, another crackdown on China and AI while they continue to ignore the elephant in the room, Nvidia's chip sales. The Trump administration is moving to restrict the sale of chip design software to China, people familiar with the matter said, as the U.S. government evaluates a broader policy announcement on the issue. The Commerce Department's Bureau of Industry and Security sent letters to some of the leading providers of electronic design automation, or EDA, last Friday, telling them to halt shipments to Chinese customers, said the people, asking not to be identified because the policy isn't yet public. Top makers of the technology include Cadence Design Systems, Synopsys, and Germany's Siemens. The Commerce Department is reviewing exports of strategic significance to China. An agency spokesperson said, in some cases, Commerce has suspended existing export licenses or imposed additional license requirements while the review is pending. So this is another form of export controls, another salvo in the trade war. This time it's design software that's used to build chips. That is now off limits. All this stuff combined, Nvidia is actually having a pretty good morning here, up by 5.16, 5.3% here, $141.96. Again, the AI bubble will pop someday, but it ain't going to be today, guys. All right, now let's talk about the tariff story here. Trump trade strategy roiled by court blocking global tariffs. Again, this is a temporary setback. We all know this is going to the Supreme Court. President Donald Trump's tariff strategy has been thrown into turmoil after a U.S. court issued a rare rebuke blocking many of the import taxes he has threatened and imposed on other countries. In a ruling issued late Wednesday, a three-judge panel for the U.S. Court of International Trade declared that the Trump administration had wrongly invoked a 1977 law in imposing his Liberation Day tariffs on dozens of countries, and they were therefore illegal. It also extended that ruling to previous tariffs levied on Canada, Mexico, and China over the security of the U.S. border and trafficking in fentanyl. The Trump administration immediately said it would appeal, putting the fate of the tariffs in the hands of an appellate court and potentially the Supreme Court. The ruling doesn't affect Trump's first-term levies on many imports from China or sectoral duties planned or already imposed on goods, including steel, which are based on a different legal foundation that the Trump administration may now be forced to make more use of to pursue its tariff campaign. So look, they're basically saying this 1977 law that they've used to declare an emergency in order to enact all these tariffs, that doesn't give the president the power that he's claiming it does. There are plenty of other laws the president could tap into and say, this is now why I'm doing my tariffs, and then they'll challenge it in a different court of law. Look, ultimately, this is going to end up in the Supreme Court, and they're going to say yay or nay. In the meantime, the negotiations are on hold. The deadlines are going to come and go. This undoubtedly weakens Trump's position at the negotiating table. Ultimately, will this affect the outcome of the trade war? Supreme Court will decide. All right, also going on this morning, we've got coal sticks to annual targets after smaller than expected quarterly loss. Coal stock is ripping here on a pretty awful quarter just because the market was expecting more awful. Coal's retained its annual forecast after reporting better than expected results for the first quarter on Thursday as the U.S. department store chain bets on its turnaround efforts against the background of tariff-induced choppy demand. The company shares were up 6% in pre-market trading. The company maintained its annual sales target of a 5 to 7% fall and earnings per share expectations of 10 to 60 cents. Again, they're still expecting sales to drop 5 to 7%, and this is an earnings beat. Analysts had expected Kohl's to cut or withdraw its forecasts at a time when tariffs have forced several companies in the retail space to sound warnings on consumer demand this year and lower their targets. The company, which fired its CEO earlier this month for a personal relationship with a vendor, reported a loss per share of 13 cents for the first quarter, compared with preliminary expectations for a loss of 20 to 24 cents. Analysts had expected a loss of 26 cents. So the company's still losing money. They're just losing money at a slower rate. Kohl's also reported a 3.9% fall in quarterly comparable sales, compared with a preliminary expectations of a 4 to 4.3% decline. So look, 5 to 7% drop in revenue, 3.9% drop in same-store sales, a loss of 13 cents. These were awful earnings, but look at what Kohl stock has done year to date. It's already down 42.3% year to date. So stocks rallying this morning on news that things aren't as bad as previously feared. Right now, it's up 12.4%. Trading at $9.11, up over $1 here. Bad news for Kohl's, but much better than expected. Meanwhile, Salesforce turns in strong results and an optimistic forecast, and everybody's railing and raving about Salesforce's AI money, but they're not making any. Revenue's going up, but they're not making any money off of it. Salesforce shares were volatile and extended trading on Wednesday after the sales and customer service software maker reported upbeat fiscal first quarter results and guidance. Earnings per share of $2.58 adjusted on revenue of $9.83 billion. Salesforce revenue grew 7.6% year over year in the quarter, which ended April 30th, according to the statement. Net income, however, was $1.54 billion or $1.59 a share, which was basically flat, $1.53 billion or $1.56 share a year ago. So big growth in revenue, but no growth in profits. In other words, AI doesn't really make them any money. It would be Salesforce's, I missed something important here. President Trump announced sweeping tariffs on goods imported into the U.S. in early April. Co-founder and CEO Mark Benioff sounded positive on the company's results for the quarter anyway, pointing to its plan announced on Tuesday to buy data management company Informatica for $8 billion. So Salesforce is out being a big spender, doing an acquisition here. It would be Salesforce's priciest acquisition since the $27.1 billion Slack deal in 2021. Slack marked the top end of the buyout Salesforce had made under Benioff. Activist investors raised concerns about all the spending in addition to slowing revenue growth. So Salesforce stock not doing so hot here. That's interesting. Market's open. It's now down 6.9% on an earnings beat, air quotes, $256.92 a share for Salesforce. Also going on this morning, UK gas generation plunges as wind surge turns prices negative. Pay attention, guys. This is how you destroy a power grid. Europe is once again putting on a clinic. And you might be saying like, oh my God, power prices went negative. Look at all this cheap, abundant energy. No, that is not how this works. This is terrible for your electric bill. The UK's blustery conditions are allowing the country to get more than half of its electricity from cheaper renewable sources, pushing down gas generation to the lowest level since October. Wind farms supplied 59% of the UK's power needs on Thursday morning, according to data from grid operator Neso. Gas generation, meanwhile, fell to as low as 1.2 gigawatts. Oh, somebody say it. Somebody say it in the comments. Was it 1.21 gigawatts by any chance? I'm just throwing that out there. That's less than a quarter of the average for the last month. Alexon data shows the surge in wind briefly pushed intraday power prices below zero. All right, this is hilarious here. Pushed intraday power prices below zero. Now, you might be saying to yourself, how is this possible? How could power prices ever go negative? That doesn't make sense. You have to understand the perverse incentives created around renewables in Europe. These windmills make money whether they sell power or not, as long as they produce power because of tax credits, because of all the subsidies they get. It gets to the point where they can sell power at a loss and still make money because UK taxes are paying them more than they're losing making the power. And it gets to the point where on windy days, power prices go lower and lower and lower. The windmills don't care. They're making money off of generous tax subsidies anyway. Power prices keep going down. Now, for a power grid operator, too much power is just as bad as not enough. And if you get too much power on the grid, you can actually blow breakers and bring the whole grid down. And so they lower prices. They go all the way to zero. The windmills are still producing too much power. And so the power prices actually go negative, where the grid operator says, we are now so hurting, you have got to pay us to take your power off your hands because we don't know what to do with it. Now, windmills are still profitable when that happens. Coal plants are not. Nuclear plants are not. Natural gas plants are not. And so they're forced to shut down, or they become less and less profitable. The wind turbines don't care. They make the money anyway from the subsidies. And ultimately, you end up putting your gas plants and your coal plants out of business. But then when the wind isn't blowing, you've got big problems because you don't have enough energy to power your grid. And then you get situations like we had in Spain and Portugal when half the freaking continent loses power. This is how you destroy an otherwise perfectly functional power grid, when you put idiots and imbecilic children in charge of your energy policy. And speaking of idiots and imbecilic decisions, check this one out. UK plans to force pension funds to invest in private markets. Oh my God, we're not just opening them up to private markets. We are forcing your pension to buy this crap. This is a new low, even for the world of finance, guys. The UK said it plans to require the country's pension funds to invest in private markets and the domestic economy, a move widely opposed by the City of London's investment managers. The government will take a reserve power in the pension schemes bill to set binding asset allocation targets. We're going to make you buy this junk. For investments in private markets, the Treasury said Thursday in an emailed statement. It will also secure £27.5 billion, or about $36.9 billion, for local investment priorities from defined benefit programs for public employees. The Labour government, which took power in July, has been seeking to deliver on its pledge to boost private investment and bail out the people who fund our campaigns and economic growth. To do that, it unveiled a series of measures designed to overhaul the country's fragmented pension system. Now, look, guys, private equity is a mess both in the United States and abroad. And now we are forcing pension funds to buy this crap that nobody else wants under threat of government force so that those private equity firms can get their money back at the expense of your retirement if you live in the UK. This is the most disgusting thing I've ever seen a government do with somebody's retirement funds. Now, the fund managers are crying foul here, and rightly so. The threat of government telling trustees how they should invest is a step too far, said Laura Myers, partner at consulting firm LCP, on Thursday. Trustees draw on professional expertise to draw up an investment strategy which will best meet the needs of members, Myers said, adding this should never be overridden by the political priorities of the government of the day. This is ESG investing run amok. This is just outright everybody. Quick, bail out private equity. I don't care what it costs your pension. Remember, the UK pension system was on the brink of collapse just 2 years ago. It's not like they've got money to burn here. And private equity's not done here. We've got Collar Capital bundles private equity stakes into a $1 billion securitization. Look at the term they've created. Collar Capital is assembling a roughly $1 billion structured finance instrument backed by stakes in some of its private capital secondary funds. The firm's second such deal this year, according to people with knowledge of the transaction. Citigroup is structuring the so-called collateralized fund obligation, which will include both debt and equity portions in a separate person who asked not to be named because they're not authorized to speak publicly. So a CFO, a collateralized fund obligation made up of private equity and debt from private equity. And, well, we're going to bundle that up into a bond and we're going to sell it to investors, probably pension funds. And the UK is now forcing them to buy this kind of garbage. So, look, Wall Street is getting this stuff off their books and onto the backs of retirement investors. So we all got that going for us. Meanwhile, we got jobless data this morning. Initial jobless claims, not too alarming here. 240,000 initial jobless claims. That's up from 226,000 last week, right around the prior peak that we saw in April of 241,000, but still kind of within this band that we've been in for a while. So the layoffs are not yet that alarming. Now, this is somewhat alarming. Continuing jobless claims, 1.92 million. That is up sharply from 1.89 million last week. And it is a new high. We've been kind of watching these higher highs for a while now. People are not losing their jobs at alarming rates, but the people who are losing their jobs are not finding new work. And so the number of unemployed people continues to pile up. It's still not showing in that BLS data. It's still not showing in the unemployment claims. It's still not showing up in the monthly jobs numbers. But you can see it here, the higher highs week after week in the continuing claims. So the labor market continues to weaken here. And then the last one we got today is a big head scratcher. United States corporate profits. All right, let me just read this. Corporate profits in the U.S. fell by 3.6% from the previous period to 3.192 trillion in the first quarter of 2025, reversing a 5.9% jump in the fourth quarter. Now, look, guys, the market was expecting another 5.9% jump, and we got a 3.6% decline. That is a huge swing in corporate profits. Now, I don't know what's going on here in this chart. Some people are trying to say tariffs. The tariffs didn't even go into effect until after the quarter was over. So it wasn't tariffs that did this. Now, it's quite possible that the threat of tariffs did this. Maybe corporate profits were driven down because the companies scrambled to import so much inventory ahead of the end of the quarter before Liberation Day. That's a plausible explanation for the big decline in profits, because carrying extra inventory does hit your profits. But why would the market not be expecting that? Why then would that have not been priced in? We were expecting 5.9% growth, and we got a 3.6% decline. So I can explain the decline in profits. I can't explain why it is suddenly showing up in the data when nobody else was expecting it to. And this isn't a data point that I watch all that regularly, so I don't really understand the intricate nuances of this particular data point. But I can tell you a lot of people on FinTwit this morning are scratching their heads over this number, not knowing what the hell it means. I can tell you what it means. It means we're headed for a recession one way or another. You could argue we've been in a recession for 3 years now. But this one took a lot of people by surprise, a big decline in corporate profits when big growth in profits was expected. And I just want to say thank you very much to Mr. Sam. Thank you, Sam, for supporting the channel. He says, New York Times and Amazon AI deal. This is the first I've heard of this. The last I heard, the New York Times was suing most of the AI companies. The New York Times and Amazon AI. Are we talking about Anthropic? Because Anthropic is the company that Amazon owns a stake in. I haven't heard of this one yet, Sam. I'm going to have to do a little bit of research on this one. Does anybody know, was this just announced today, a deal between the New York Times and Amazon? If so, I missed that one in my research. I'm going to have to put that one in the parking lot, Sam, but thank you, sir, for supporting the channel. I will pull the thread on that one. I'm guessing that involves Anthropic, though, if I had to guess. Thank you so much, Sam, for supporting the channel. Piggo's Trading Desk. What's going on, brother? He says the government loves us, PE to the moon. Oh, yeah. The government, I mean, the government would never do anything that hurts people, right? Other than governments everywhere, always. That PE story in the UK is just disgusting. I mean, they're not just making it available. They're talking about forcing people's retirements. They're literally robbing pension plans to bail out private equity funds. I don't know what the hell Labour is doing in the UK here, but I see a lot of things that in the UK that are just outright freaking scary that they're doing. That continent, guys, that continent has fallen. Let's be honest. They have slid so far into totalitarianism. I don't even recognize them anymore. It sure as hell isn't worth fighting for. I can tell you that. It's just my take. I really don't like what I see going on the ground in Europe. But hey, Ursula might be taking over at the WEF, so maybe she'll do great, wonderful things. Thank you, Piggo, for supporting the channel, sir. Ed C has been a Melonhead member for 3 months. He says tariffs, consumer weakness, crappy business equals KSS over MBK. Kohl's and Macy's bankrupt? Is that what we're talking about? That I'm trying to math out your formula here. KSS is the ticker for Kohl's. M is the ticker for Macy's. BK, are we talking about BlackRock or are we talking about bankrupt? Maybe Burger King. I don't know. But yeah, Kohl's not looking so good, guys. Apparel retailers are in big trouble here. Consumers can't make ends meet, so they're cutting their spending. Apparel is one of those discretionary items that's getting cut. Macy's has been a train wreck for years. That company is bound for bankruptcy. There's not even many stores left. I was Macy's operating like double-digit stores in the U.S. now. So, yeah, I agree. All those things. The consumer was already weak. Those businesses were already crappy. Tariffs, sure as heck, is not going to help because most apparel is made overseas. So, absolutely, Ed, I agree with that. The BK, I'm guessing that means bankrupt, not BlackRock. I could be wrong about that one. But thank you, Ed, for supporting the channel, sir. And thank you, everybody, for having your coffee with the Melon Heads this morning once again. Appreciate all the super chats and the support of the channel, you guys, as well as you, my magnanimous Melon Heads on Patreon and YouTube. Thank you guys so much for everything you do for the channel. Spud Ruckus jumping in with the music playing. Everyone hit that like button on the way out. Absolutely, Spud Ruckus. Thank you for being a Melon Head member. Hey, don't forget that subscribe button as well. Hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.